investors have been encouraged by President Trump's policy plans. But when asked about them on Capitol Hill yesterday, Fed Chairwoman Janet Yellen said it was too early to know the true impact.
Changes in fiscal policy or other economic policies could potentially affect the economic outlook. Of course, it is too early to know what policy changes will be put in place or how their economic effects will unfold. While it is not my intention to opine on specific tax or spending proposals, I would point to the importance of improving the pace of longer-run economic growth and raising American living standards with policy.
Joining us right now, GFI Group Chief Macro Strategist John Spallanzani. John, good to see you.
Good seeing you.
So what do you think? Anything come out of the Yellen testimony yesterday that surprised you, that moved markets, and what do you expect today?
Well, I think for me the biggest thing that she said was that wage inflation is not necessarily bad. And coming out of a Fed president, that's that's very important for everyone, really, because that means that she's not going to be, obviously she's a dove, and the committee is going to get more dovish. So the fact that they're not really too concerned about wage inflation really helps everyone. And it really helps Trump a lot because his deplorables, that's the U5 and U6. And that rate is still very high compared to the overall unemployment rate, which is in the 4s.
And U5 and U6 does not include the people who've stopped looking? Dagan?
Right. It includes all the people who are looking for work, but also the people who want more hours.
Exactly. So part-time workers.
Who are underemployed. Who want full-time.
Exactly.
And that number is way above 5%.
Yeah, well, no, it's really 9%. It actually ticked up. U6 is 9.2% ticked up. And it was down in 2000, in the last boom time, it was down in the 6s.
Right.
So that's a big difference, right? So that's really Trump's main constituency. So he and Yellen really are kind of on the same page in terms of what they're looking to do and how they're going to do it, I think is the question, and that's why she was a little concerned. She said basically to the Congress, listen, hey, fiscal policy is not on us, that's on you. You show us what you're going to do, and then we'll react to it. And I think that's really it.
Sorry, was there anything there about regulatory change and the rollback of regulations? What's the impact there?
There was a big fight towards the end where the senator from Nevada had said, listen, the housing rates were 350,000 at the peak. They're 250 now. Why are, regional banks under Dodd-Frank, and why are they really still being persecuted, basically, is what he said. Why are they under that umbrella when they were not the cause of the housing meltdown? So I think, obviously, we're going to see some type of regulatory relief, and that's another positive for the market.
John, how about workforce participation? I mean, we talked about employment, but when you look at that, going back to the 50s, it's done nothing but fall.
Exactly.
And since the financial crisis, it's really fallen. What's the Fed's agenda around doing something there?
Well, I don't think you can do too much with that because obviously it's a generational thing where you have baby boomers rolling off, and you also have, Maria, eventually you're going to go into the store, pick up whatever you want, and just walk out because the Apple Pay or whatever
That's what just happened.
Yeah, it's going to.
I just said that.
So technology is obviously affecting a lot of jobs coupled with that.
But there's so many people on the sidelines. In the most recent employment report, which was for January, right around the time Trump was inaugurated, it ticked up labor participation about 0.2%, which was an indication of optimism.
But that's also the indication of CEO optimism, which has gone off the charts, right? So optimism, getting back to your point, optimism costs nothing, right? The cost on that is zero. It doesn't cost $1 trillion, $2 trillion. We don't have to worry about border adjustment taxes. Optimism costs nothing, and Trump is great at optics and optimism. And that comes back from, he's following Ronald Reagan's playbook, really.
How about the optimism in financial services? Let's talk about that for a second. What are you seeing on trading desks? We've got another deal today. Softbank acquiring Fortress Investment Group, $3.3 billion. This is a real departure for Softbank, acquiring an asset manager from a technology company.
Yeah, I think it's interesting. He might use that as an umbrella to do bigger deals down the road. I think that's part of the thing. I think also the, if you look at the overall M&A market, we haven't seen the boom. I think 2017 you're going to see a lot more M&A. That's just one of the deals to come off the deck. But 2016, Goldman Sachs, I think they said they didn't pay their bankers, for the whole year. So obviously people have to make their number. They have to make their digit. There's a lot of deals waiting to be done. Now that the election is over, I think that you're going to see a lot more deals because this is a prime climate, right? The market's going higher, your stocks are going higher, the values of the companies are going higher. There's a lot of depressed values out there.
Stock as currency.
Well,
to
could
acquire.
be.
You can do stock deals if your stock is.
I mean, Apple has $260 billion of cash on their balance sheet. You look at Procter & Gamble. Procter & Gamble is flat for 20 years. You look at companies like Merck, the big cap stocks, the market is really flat for the last 20 years.
I don't think Procter & Gamble is going to be flat in 17 with Nelson Peltz involved.
That's
right?
what I'm saying.
Yeah.
Well, I'm saying there's a good chance to buy if it hasn't moved.
Let me ask you, because you've been all over this. You were very smart. You came on this program and you said, buy stocks. This rally has legs. Back in November, you said that. Where are you now? Do you think there's still room to run in this market?
I still think we're still in the seventh inning of this bull run, seventh, eighth. I think that we have quite a ways to go because what knocks markets into bear markets is basically recession or some type of black swan, obviously, which we can't predict. But if we look at recessionary forces, we don't really see any, right, for a long time because the unemployment rate is still going down. We don't see any turn in optimism. We're seeing actually good optimism. The market is telling us, right, that's the biggest barometer of how the economy is doing, that things are going to be good 6, 12, 18 months ahead. So I think we're good right now. Except for a policy error like a border adjustment tax of 30% that could knock everything on.
Well, the other policy error is just not getting on with it quickly enough. I suspect that actually you can't keep this optimism going that long without real action.
The average honeymoon for a president is 7 months. This president has no honeymoon. He has not had a honeymoon. It's been 2 weeks. He's been under duress the whole time. So really, the administration is being attacked from all sides, and I think we'll see more departures right now coming out of it. But I think that 6 months from now, things will be tightened down.
All right, we'll leave it there. John, great to see you.
Good seeing you.
Thanks so much, John Spallanzani there. Coming